Welcome back, and we're joined by Gaurav Pandey, MD and CEO at Godrej Properties, joining us this morning to give us a perspective of the Q4 numbers. Uh, you've achieved the highest ever bookings, collections, and operating cash flow, as well as, in fact, business development as well in FY26. Can you tell us what were the drivers for the growth? Give us a sense.
Thanks for the question and thanks for having me here. I think behind the large set of growth drivers was a sort of a very clear strategy for the year. On one side, we were extremely focused on ensuring that a launch calendar and sustained sales strategy plays out extremely well. So we could bring a lot of launches on time, ensure our sustained sales engine is performing month on month. So I think that's a contributor for the top line growth delivery. On the operating matrices like collections, as well as execution of by way of deliveries, there was a huge focus on ensuring that spends, direct construction spend sees a huge growth. So we could achieve a whopping 62% Y on Y growth on the direct construction spends. What it did was that it led to series of domino effect of great results. So whether it was collections doing very well, also as overachieving a delivery guidance. We had given 10 million square feet, we could achieve 12.1 million square feet against that. So I think it was a combination of great strategy at the start of the year, more focused on planned launches, acceleration of sustainable sales engine, and also strong focus on execution speed. Yeah.
And you've overachieved on pretty much all of your guidances for FY26, but except collections. On the collections front, there was a slight bit of a miss. Give us the sense with regard to what's played out there.
I think would have loved to push for that, minor 5% gap that we could see on collections. But that was largely emanating that some of our deliveries were happening towards later part of March. And typically customers get 30 days, rightfully so, to pay for that particular milestone. So it was more of a spillover sort of an impact. But that being said, I think the more exciting part was that we could achieve 8,000, close to 8,000 crores of collections in the quarter 4, which was, sequentially 86% or so of quarter on quarter growth. So yes, we would have loved to push a little bit more, and some of it has slipped to quarter 1. But yeah, I mean, largely the entire collection pool was very strong and we could achieve that.
And you've increased your pre-sales guidance to 20%, collections to 14% as compared to FY26 for the year FY27. Is this conservative given the current geopolitical uncertainty, or are you confident of achieving that?
I think talking about sales guidance and collections guidance that we've come up, sales guidance is largely, you're right, has an impact from a geopolitical environment. And our current assumptions that the current situation will not stretch beyond a logical period of time. So I assume that next few weeks we should see resolution and things would be fine. So that, of course, is an assumption. On the collections, yes, it is also dependent on a couple of factors, but I would say it's largely execution oriented. So I think with some degree of caution, we are very driven towards achieving these.
And you've acquired a 20-acre land parcel as well in Whitefield, Bengaluru. Can you put some color on what the expected revenue and execution timelines look like?
I think we acquired close to about six acquisitions. We did six acquisitions in quarter 4. And that led to more than 17,000 crores of revenue booked in for the quarter. And with that, we've crossed a full year guidance to 42,100 crores against a guidance of 20,000 crores of estimated revenue potential logged in. The specific transaction that you're talking about, the Bangalore one, was the quarter 4 transaction that we did. It's a 20-acre low-rise development. And if my memory serves me right, it's an estimated top line of about 2,000 odd crores. And yeah, I mean, this is a great micro market. We've done exceedingly well consistently in Whitefield micro market. And we thought that this would, sort of add depth to that micro market, and also will be a very interesting low-rise development which that market is been wanting from us, and we've not been able to bring to the market for a while. And very thrilled that this should hit this year in terms of a launch.
Right, Gaurav. And you also acquired a 44-acre land parcel in Coimbatore. And with this, you've entered the Coimbatore market as well. What is the launch timeline and expected revenue from that? And most importantly, what's the growth you are expecting from the Coimbatore market?
See, largely we have a strategy of increasing and building upon a strength on group housing in tier one cities, which in South India is largely Bangalore and Hyderabad. And outside these cities, the tier one cities, we are having a focus towards deepening our presence in tier two cities via plotted developments only, which have low bandwidth and lower risk of execution and which is why Coimbatore fit the bill exactly at its place, a 44-acre plotted development. It is not going to see any builds per se, but we'll see great infrastructure. It's a fantastic city, has always been on a radar and also geographically very well placed because it enjoys great infrastructure and great even airport connectivity apart from great road connectivity to many destinations nearby. So yeah, I mean the strategy is quite simple: is to increase present tier two cities by way of plotted developments. Coimbatore is one of that. Our launch timeline will be definitely within the year. We will likely push for it to be a quarter two launch or a quarter three launch.
And you're raising funds of around 3,000 crore via NCDs. What's the use case?
I mean, we're not really raising per se. It's more like typically we have a set of NCDs that get retired and they get refinanced by a new set of NCDs.
Okay, point taken. And the Indian real estate market, give us a sense of that. It's witnessing a bit of a slowdown. You're also seeing a slowdown in your own portfolio. What's playing out? Give us a sense.
I think Indian real estate, is approaching gradually towards somewhat like a mid-stage cycle. And this is where I would say end user demand is the main driver. And I think kind of perfectly fits well with our strategy. We're more end user driven than investor demand per se. And again, there are different cities in different cycle. Not I would not hesitate to maybe explain a bit more on this. Yes, there are certain sides of the market like Gurgaon, which is more on the mature side of the market, more towards at mid stage. But then you have a market like Pune, which is still early stage because there has not been any sort of a price growth that the market has really seen. So again, different cities are in different cycles. I would say that this is a time where opportunities become much more exciting and meaningful. Why? Because one, you would see better developers gaining market share. They will be able to present opportunities which are more, standout opportunities for consumers who will start differentiating between branded products and non-branded products. I also feel this is a stage where quality and execution will be the role which will be rewarded the most from a market point of view. And third, I think this is also a time where people with larger spans, of operations, because very few companies have presence beyond one city. We're the only pan India residential platform present in all the key cities for odd years. I think platforms like us will be poised to gain. So yeah, exciting market opportunity for some of us, and very much looking forward to capitalizing on it.
Okay, Gaurav, thank you so much for coming in and speaking with us and giving us that perspective. All right, and what we'll do, viewers, is slip in a very short break. Continue coverage on the other side. Stay with us. Those FNOQs coming your way.